Hello, everyone. Welcome back in Road to Retirement. Tony Marlett Jr. at Brookside Financial, joined by Zach Padden at Anselmo and Company. Good day to you, Zach.
Good day to you too, Tony. It's been a little while since we've been able to get one of these episodes out.
Yeah, it has. You're right. People are clamoring for us to return. They're knocking down doors. They're calling in. So we felt the need to get on.
Yeah, we've been doing a few more public events lately, so that's really gotten in the way of having these podcasts. And you have a couple more coming up, I think, this week, right?
Yeah, we're doing a Big Beautiful Bill seminar, myself and Jeff Corrigan as well. And then I'm doing just an overall asset management presentation for the fine folks at the North Royalton Senior Center. So, yeah, like you said, we've had a lot of this going on. I know you and I went to the opening of the Senior Center about a month ago or so now.
Yeah, I think that's going to be a great thing for the city of North Royalton, and it's going to be good for their active community. I think a lot of people showed up that day, didn't know what to expect for this new center. They were in the basement of an older apartment complex before, so it's good to see now they have their own designated space and they have room to grow and give the seniors a place to go.
I can't believe how crowded it was that day.
Yeah, I expected maybe 100 people max, and that gymnasium was full.
I was gonna say they probably had 100 people minimum in the gym.
Yeah, and there was more people outside, more in the classrooms, and
Right.
it was a good use of converting a school, that's for sure.
Right. Yeah, no, I think they did a good job with modernizing everything. Looking forward to being there again. You won't be around in the upcoming weeks, so this might be your the last podcast for a little while.
Yeah, I am getting ready to go on paternity leave here for a few weeks. My wife and I are expecting our first child here. So it's a little hectic time here at the office getting things kind of ready to be away for a few weeks. I mean, I know you've done it recently, but it's going to go quick, I'm sure. And the sleepless nights will be happening very frequently very soon.
Yeah, well, it's a great experience altogether. Like I've told you, and I've told Erica too. It's just overall, all in all, it's a great experience. Just embrace it, as I'm sure you will. Everybody gives you advice. I remember giving advice or getting advice, and then I remember being like, "Wow, I can actually tell some people what to expect now." So it's a great experience. Just stay in the moment, as I'm sure you will.
Yeah, we updated our estate plan this morning. I've been
Oh,
working on updating beneficiaries on life insurance and
there you
stuff,
go.
getting things set up. Yeah, it's like, oh, this is needed to be done. And if I didn't do these things that I preached to everybody to do, I'd be a little bit of a hypocrite here. So
See, that's it. You practice what you preach, and that's what we're going for. The real life practical examples that people can use. We're not just trying to tell people what to do and not following it ourselves. So I know I've started the process of updating my life insurance too. So these are all practical solutions and things that people can apply to their own real life situation. Today, I wanted to get back on. We're going to have some guests on the podcast in the coming weeks. We've been trying to get a couple. Timing hasn't really worked out. Schedules haven't necessarily coordinated at this point. So we were going to have a guest on today. We're going to try to keep having guests on, and at least, if not every episode, pretty close, maybe every other, and just get some different points of view from some industry people, different people in the financial, legal, and then even branching out a little bit into talking a little bit about economics and tariffs was on the agenda for today.
yeah, I mean, the US economy has people scared. And a lot of people don't understand the long-term effects of things we're doing. They just see some short-term changes, but the US economy is definitely in a volatile state right now, which has a lot of people questioning what's going on or wanting to know more information. And you can go online and read a lot of different things.
Sure. Yep.
And I mean, the internet's never been a lie. There's never been a lie on the internet. Everything's always
Nope.
100% true.
Yep. There's no bias either. No
No, so that's
bias.
That's one of the biggest issues with some of these things is you'll read one article that everything's terrible. The next
Yep.
one says the US economy is the strongest it's ever been.
Right.
And more than likely, we're somewhere in the middle.
Yep. Yeah. So that's a good point to start with because I read something last week. There's the CPI is the Consumer Price Index, which is the inflation gauge. And there's the PPI, which is the Producer Price Index, which is like, think of it as wholesale on the PPI versus retail on the CPI. The Consumer Price Index looked pretty good. It a little bit under 3%. And if you gauge inflation off of that, that's pretty much where you need to be. It's a step in the right direction. I think we're supposed to be around 2.25, 2.5, but we're coming off of 40-year highs. I read an article and it said the inflation report was sticky, which means we're having trouble getting inflation down, which is, I don't think that's accurate. The PPI has been a little sticky. Now, what that means is wholesale costs, because of government spending, the tariffs have been causing producer inflation up to this point, for the most part, save for a couple of categories. The costs have not been passed on to the consumer.
Yeah, which is good for a lot of these consumers. Everybody sees these rates and they're like, everything's going up. Well, a lot of these companies are taking a hit. They're not just passing the bill over to us, which is really good because a lot of people are struggling to make ends meet right now because things are more expensive.
Right. And you can't, if you're a company, I don't care if you're big or small, you can't do that forever. So I think what some of these companies are doing is trying to play the waiting game. We do have some pretty big agreements with Japan, with the European Union that have come to fruition over the last month or so. But by and large, the tariffs have not crushed the economy like all the economists said they would, and all the people in the media and in the education, they have said that tariffs have never worked out before. Now, part of that's correct. Part of it's you need a little bit more context for, but you can't play the game. You can't just absorb costs forever. I just got a new car. I leased a new car about a month ago. And I asked the guy straight up that I was dealing with, I said, look, how have tariffs affected you guys? And I didn't want to hear any answer on either side of it besides, what he was going to tell me is the truth. And the takeaway was the consumer, like they have not passed that on to the consumer as of yet, but that can't go on forever. So I think what some of these companies are waiting for is some relief. We get some trade deals in place. They can take the restraints off. And then, ideally it's an everybody wins situation. Obviously not everything goes like that all the time though.
I feel like so much of these tariffs have been used as bargaining chips. And that's kind of what a lot of these deals have come through. It has made progress with some of these countries. And it's not just a short term solution. A lot of these are building a long term agreement, which will hopefully drive our economy in the correct direction, not what all these economists said, which was going to be tank the US economy.
And they were saying it was going to be pronounced and it was going to be immediate. And that was back in April. So I would say save from meat prices and egg prices. You really haven't seen that much. You haven't seen really wholesale or whole scale inflation. And I'm just looking at numbers here. U.S. GDP, the growth rate, 3%. And that's with everything that's taken place. And this is as of today. U.S. real growth domestic product, 3%. And that's with all the tariffs. So I've heard some people say we could be at closer to 4%. If that's the case, I mean, those are pretty good numbers right there. The jobs report came out, and that was the one I think that there was a lot of confusion on, and I think that may have been the most negative out of all the numbers was the jobs report. So obviously, government jobs, I don't think it's a surprise to anybody. Those have gone down. That's been the biggest net loser out of all of them. but they were also the biggest net gain under the Biden administration. So obviously, it's two different groups, two different ways to look at this. But the biggest ripple in the job market has been with government jobs. Everything else has been somewhat steady, and the numbers from May and June have been revised downwards pretty sharply. So obviously, that's not a good jobs report.
It was, I mean, it was, we knew it was going to happen with this political group in office. I mean, it was just a matter of time. It was talked about the whole campaign that there were going to be a lot of government jobs cut, and they have followed through with that. And we won't know the long term effects of some of these cuts for a long time, but hopefully they're doing what they feel is in the best interest of our economy. I mean, we got to support whoever's in office no matter what and hope they're looking out for our best interest. I know months ago you submitted a short that popped off, and it talked about if you invest just during one party's administrations
Yeah.
and one versus the other or both, the amount of money you make when you support the whole US economy, no matter who's in
Sure.
office, is so much better. And I think a
Yeah.
lot of people right now are scared to be in the market.
Yeah, and I think if there's a takeaway from this, and if there's something that people take from us on this, obviously I'm not a political analyst, neither are you, but if you are say, there's people I don't like Trump, there's people say I don't like Biden. If you got out of the market in either situation, you'd be at a loss. There's plenty of people that got out in April of this year during what they called the Liberation Day, where all the tariffs went up on April 2nd. Since that low point, the market is up 16%. We're up 10% for the year. And since that low point in April, we're up 16%. So if you're worried about long-term effects and you don't think you can stomach market swings, that's one thing if you're at that stage in your life. But if you're being, ideological or political about it on either side of the aisle, you're not doing yourself any favors.
No, some people are like, well, I just pulled it out and I have it in cash. Well, inflation's a little under 3% right now. You're losing money every day not having it invested at least in something. Just letting it sit there, like it's not doing you any good for long term growth.
Right.
And you're right, it is different if you're at the retirement age and you don't want that market volatility. That's completely understandable then to take a less risky approach. But if you're just sitting there because you don't like how the political climate is of our country, you're doing yourself a disservice long term. I don't think either one of us want to be doing this when we're 75 or 80.
Right.
And if you're not investing your money, that can happen for a lot of people that you're still having to work to make ends meet then.
Yeah, without a doubt. So far for this earnings season, 80% of the companies that are reporting have reported beating their earnings projections. So that goes to show you that the economy is your markets and the economy don't always they're not always in sync. The market's been great. The economy, I think, has been good, maybe not great, not horrible. I think it's been a little above average, a little on the positive side. And like I said, I think that could change if some of these the producers aren't able to absorb the cost much longer. I also think maybe that's why there's been pressure to decrease interest rates, because regardless of what the numbers are showing you, which the numbers themselves do not indicate that a need for interest rates to be cut. I think it's beyond the optics that they're saying, and that Trump has come out. I think people on both sides of the aisle have come out and said, yeah, I think it's time we do need to cut interest rates. And I do think at the next Fed meeting, we could see as high as a 0.5% or 50 basis point cut on those rates. And remember, that's designed to stimulate activity like mortgages.
Yeah, and I think you, at least in our local economy, you're seeing houses sit a little longer than the last few years. I mean, the housing market since COVID has been wild. Prices skyrocketed, interest rates were 2%. We're not going to see 2% interest rates again. I think a lot of people are sitting here like, oh, I'm going to wait for them to get down real low again. I think there are cuts that are coming. You're right, but I don't think we're ever going to get back to that historically low percentage.
right?
And if we do, I'll be refinancing my house and thanking that I bought when I did because prices will go up again.
Yeah, and I mean, think about it. Chris, our owner, brings this up all the time. You know, if rates go too low, banks don't make anything on deposits. The last thing that you want is for a banking crisis or banks to start struggling. So, there's got to be some sort of happy medium here, and I do think rates will come down uh, 2 more times this year.
Yeah, and I think a lot of people, you always hear that saying, date the rate, marry the home. I think a lot of people are still afraid to do that right now
There you
because
go.
they're wanting to hold it off. I mean, it's just part of life. You got to be able to stick with what you have, but a lot of people are scared to make moves right now.
Right,
And it's understandable, but you can't live in fear forever because if not, it'll be 30 years have passed and you'll have done nothing.
right. So a lot of times when we talk about costs going up, going down, people go right to oil and gas. So gas prices are down over the last 1 year. $3.50 was the average at this time last year. It's 3.24 this year. So, or now I should say. So over the last year, gas prices have gone down. Year to date, we're up a little bit, about 3.15 to 3.24. So we're up year to date a little bit on gas prices, but if you look back over the last year, we're down on those too. But there's been times in the past where gas prices far outpace inflation, just like medical bills and college as well.
Yeah. I mean, you always hear people saying that we need to drill and do more gas exploration locally in the states and all that, and hopefully at some point we are less reliant on other countries. But prices are looking a lot better than would have been expected this year with
Mm-hmm.
the tariffs and everything that were going on with some of these countries. And I think
Yeah,
we're in a better spot than I thought we would have been right now.
I think it's consensus across the board. A lot of people, in the past, I think there's been times when tariffs have not worked. I think back to the Great Depression and I forget the name of the act. Smoody. I forget the name of the act, but back in the late 20s, it led to, partially anyway, led to the Depression. My math may be off there, but bottom line, sometimes it's worked, sometimes it hasn't. It's just, you need context for everything. And we're not out of the woods yet, no matter what. So even if people are like, well, things have been great so far, and we haven't seen that, yeah, that may be the case, but there's still plenty of time to go on this. The final verdict has not been rendered as of yet. But the bottom line and the takeaway, like you said before, you don't want to be afraid. You want to stay in the market. If you have the time frame, you really want to just look at what your goals are and how long you have to get there, because that's when people do the best, is when you get into the market or when you dollar cost average, when things are going the worst.
And one thing that you guys do, and I know it's really important that people realize, is you have them take a risk assessment when they come in to meet with us. So that way we understand what their goals, how risk averse they want to be, so that we can try to get them a plan and give them realistic expectations on what can happen. Is that correct?
Yeah, absolutely. And then I think, we try to match that up. A lot of times it's been 15, 20 years since somebody started their 401 or started their portfolio, and they haven't changed the risk the risk factor in that time. So if you're 20 years older than what you are when you started, you may need to change that. And then it takes into account all of your financial accounts. So anything that you have, we count that all towards your overall risk number. Along those lines, I encourage people to contribute to the accounts as much as possible too, say on a monthly basis, because just say you contributed in March, April, May this year, you're seeing some pretty nice return just in that 4 or 5 month time frame since that point.
Yeah. And I think to the opposite side of that, just if you do invest and you see it downtick right away, don't get nervous. I mean, you can't just base your investments on a 1 month for these long term deals. You can't just think short term always. You got to sometimes look at the bigger picture. And that's hard to do
Yeah.
for a lot of people.
Right. And I mean, one of the biggest ways that advisors help people, and really I would say in any walk of life, is behavioral coaching. So we try to help save you from yourself so you don't have to make those decisions. We're there to make them for you. You want to call up and vent when the market's down. I understand that. I've listened to hundreds, if not more, people rant over the years about regardless of the reason of why the market's down. It's part of what we do. At the end of the call or the end of the conversation, I'm going to say, okay, I get your concerns, but we have a plan in place. This is why we're investing that way. If you want to make changes, we'll make the changes. But if you're listening to our advice and you're following what we're doing, we're already managing it for that reason.
We don't recommend being Browns fans either, though. Even though we are,
Talk
we
about
don't.
volatile. There's
Yeah, that's
nothing
a
more
volatile fan
volatile
base.
than that quarterback situation.
Hey, we named our starter of the future 40-year-old Joe Flacco.
Is he only 40? I thought he was north of 40.
I think I read he was 40. I might
All right.
be
No,
off,
that could
but
be.
he is. We have 5 quarterbacks on our roster, with actually 6 now because we just signed. Ooh, he played in the last preseason game. Henry.
I remember. I forgot the name too, but I remember what you're talking about. How many starting quarterbacks do the Browns see this year?
I'm saying 3.
You say 3?
I don't think we should start Pickett. I think he gets traded before the year starts.
He might just get released though too. But I'm gonna say 4, and I don't necessarily think it's gonna be the 4 that are on the roster now. So I think. Do you think it's a foregone conclusion that Shador starts a game?
I think so at some point.
I think so
If
too.
we are struggling, you do not believe. I can't imagine how many we want Shador chance there will be going around Cleveland.
This
They'll be
sounds to
flashing
me.
the wrist. They'll be
Yep.
wearing the jerseys.
His dad will be in the stands. He'll be leading the charge.
Johnny
Um,
Manziel 2.0.
so I was just gonna say, this sounds to me like Brian Hoyer, Johnny Manziel 2.0.
Give me back Brian Hoyer any day of the week.
Yeah, he had a really good run here. He got a
Yeah.
raw deal.
I was waiting for us to trade for Kirk Cousins. I just thought it was going to happen. I was sold
Yeah.
that he was going to come in, but we signed a different 40-year-old quarterback. So,
Yeah.
and
Maybe not
Flacco we
as
trust.
not as strong of an arm, but he's got a winning pedigree. Guy knows how to win games.
Yeah, and AFC North is not a place I'd want to be a starting quarterback.
Yeah. So don't manage your portfolio like the Browns manage quarterbacks is our takeaway from today.
Yeah.
You don't want to just go with whatever the fans are yelling at you about and whatever the hot hand appears to be now. You want to have a plan in place so you're not the worst run organization, at least in football.
And if you have not check the unclaimed funds records for the state of Ohio, unless you want to support the new build of the Cleveland Browns Stadium here in Brook Park.
Yeah.
I still can't believe they're using unclaimed funds from the state to fund
I think
that.
there's a time limit they have. I think they have to let people know, but then if you don't claim it, it's they're gonna find a purpose for it, and it's gonna be the stadium.
I read an article that Johnny Manziel is one of the donors now for the Brown Stadium because when he lived in Cleveland, he has like 2 unclaimed funds from the state of Ohio.
Wow.
I don't think he's coming back for his $10 that somebody
I
in
was gonna
Ohio
say
owes
if
him.
it might be a lot of money if it's him. He probably just forgot about it.
I mean, I'll take it if he doesn't want it. He can gladly sign it over to me.
Put it towards baby's
Diapers.
college fund.
Yeah, we'll put it towards some diapers here.
Diapers first. You're right. Diapers first.
Yeah, then we got to figure out those 529 plans and possibly Trump accounts, but we'll see how those markets are going for that.
The Trump accounts, you at least will get the free $1,000. And I think one of the advantages, there's advantages, there's disadvantages to it, but I think one of the more interesting pieces of it is it'll convert to an IRA. So you need earned income to start an IRA, but this from what we know so far up to this point, this is kind of like a workaround. So if your baby, you wanted to open a Trump account, you could put in up to 5,000 a year and you do not need earned income for it. So that could give your kid, anybody born between 25 and 28, a pretty nice head start. There's pros and cons. If you have questions about it, you can give us a call or talk to your financial professional. Everybody's situation is different. A lot of it depends on if you're going to pay capital gains taxes or income taxes if you use it the right way.
Yeah, it's definitely going to be interesting to see in 18 to 20 years how some of these accounts shake out. And we'll probably be talking about it then when the first people start taking withdrawals from these Trump accounts.
Yeah. Yep. All right. So anything else to add?
I don't think so today, but I think you'll be seeing Tony with some guests here in the next few weeks, hopefully. And then here in about a month, we'll be back to our regularly scheduled program. If you see there are any professionals or different industries you have questions about, feel free to reach out to one of us and we will try to get them on there. But if you want to find us on YouTube, find us at Brookside Financial or Anselmo Law, and feel free to give us a call.
All right. Well, thanks again, Zach. That does it for this episode of Road to Retirement. For Zach Patton, Tony Marlette Jr., we look forward to talking to everybody soon. Thank you.
Thank you, guys.